Citigroup's capitalizing on the GCC's IPO market, and UAE-based fintech Qashio raises $10 million. You're watching The Daily Brief with Forbes. I'm Ramia Faraj. Citigroup's investment banking team has doubled in size over the past 2 years, and more people are being added to the UAE and Saudi Arabia. They're seeking to take advantage of the Gulf's IPO market. Gulf issuers have raised about $16 billion in IPOs this year, accounting for around half of total IPO proceeds from Europe, the Middle East, and Africa. The growth in Gulf equity capital markets is in sharp contrast to the U.S. and Europe, where global banks have been trimming headcount in a deal-making drought. UAE-based fintech startup Qashio has raised $10 million in a seed funding round to start operations in Saudi. The round consists of both equity and non-equity financing and was led by regional and international investors, strategic family offices, and angels. Founded in 2021, Qashio enables business owners and finance leaders full visibility and control of all expenses by providing real-time tracking for every business expense and allowing enterprises and SMEs to make informed cash flow decisions. The global economy should avoid a recession next year, but the worst energy crisis since the 1970s will trigger a sharp slowdown, with Europe hit the hardest. The OECD forecasts the Eurozone economy will slow from 3.3% growth this year to 0.5% in 2023, before recovering to expand by 1.4% in 2024. It says world growth will slide from 3.1% this year to 2.2% next year and rebound slightly to 2.7% in 2024. Hong Kong stocks fell for a fifth straight trading day today on investor worries that a fresh COVID-19 outbreak in China could lead to more economically painful lockdowns. The Hang Seng sank 1.31%. The Shanghai Composite edged up slightly, 0.13%, while the Shenzhen Composite on China's second exchange shed 1.29%. Chinese authorities are reportedly poised to impose a fine of more than $1 billion on Jack Ma's Ant Group, setting the stage for ending the fintech company's 2-year-long regulatory overhaul. A fine on Ant could help pave the way for the company to secure a long-awaited financial holding company license, seek growth again, and eventually revive its plans for a public market debut. Ant's $37 billion IPO was scuttled at the last minute in 2020. And Sam Bankman-Fried's parents and senior executives of failed cryptocurrency exchange FTX bought at least 19 properties worth nearly $121 million in the Bahamas over the past 2 years. Most of FTX's purchases were luxury beachfront homes. Bankman-Fried made a string of extravagant spending commitments while he ran FTX, including a $40 million donation to the U.S. Democratic Party. Court filings have since revealed the failed crypto exchange, which was once valued at $32 billion, now owes creditors over $3 billion. I'm Ramia Faraj. This is The Daily Brief. Thanks for watching. See you tomorrow.